Hi everyone, thank you for joining us today with another webinar with RBC. My name is Sonia Siddiqui and joining us today are these lovely ladies, Jane and Lea. Hi ladies.
Hello.
Hello.
So we're very happy to see them do this webinar with us today. I know there's not much to do right now. We can't go outside, but we can bring these amazing webinars and information to you. So before I let these ladies take it over, I'm just going to go over a few things just to let you know you are all on listen only mode, so we will not be able to hear you, but your questions are very important to us, and we will have a Q&A session towards the end of the webinar. If you notice, there's a Q&A tab on your screen. You can click on it and put your questions in there once the presentation is over towards the end. And for best results, please use a laptop or desktop computer. If you're using a cell phone or tablet, download the Zoom app because that works best. And just to tell you a little bit about ACCESS, we've been around for over 30 years helping job seekers such as yourselves. In the past year, we were able to serve 34,000 job seekers. We work with over 2,200 employers, and we've got some great employers and sponsors such as RBC that bring these webinars to you every month. We have over 30 tailored programs that include our bridging programs, which are our sector-specific programs, programs for women, programs for leadership, entrepreneurship. Check it all out on our website. And then we've got 6 locations in the GTA with our 7th new location that's coming up in Newmarket. And then plus we're online right now. So all of our services that were held in person are now being held online. So all the classes, programs, workshops, everything has turned into being online, which is great because we're still able to serve you best. I'm going to hand it over to the ladies now. Ladies, take it away.
Awesome. Thank you so much, Sonia. All right, you can hear me okay. So welcome everyone to Access Employment and what every newcomer should know about credit. My name is Lea Vanderburgh and I am the Assistant Branch Manager at the RBC on-campus location at McMaster University. I am joined also by my colleague Jane, who I'll get her to introduce herself in just a second. First off, Jane and I both really want to acknowledge the unprecedented times that we're in right now with the spreading of COVID-19. And we want to acknowledge that at RBC, we are here to help support our clients, our communities, and everyone on this call today through these times and understand the importance of these conversations that we're having today. I do also want to mention that those who are RBC clients or the not RBC clients that are on the line who may be experiencing some hardship, have questions, concerns due to COVID-19, we encourage you to check out our public website with all of the answers. RBC has put in place great flexible relief programs, important updates, frequently asked questions, updates on different branches with branch locator tools that you can use. And so for those that are RBC clients that are on the line, we just want to remind everyone, if you are interested in booking an appointment at your local branch, we do ask that you go through your RBC online banking where you can actually book an appointment right through there. And for those of you who are not RBC clients, Jane and I did put our contact information on this deck and ask you to even reach out to us if you have any questions or need support in any way. I'll be very honest, our call centers right now are very busy due to what's happening in the world right now. So I just want to be very transparent that we do appreciate if you could reach out through different channels. I also just want to lastly just remind everyone, stated in the Public Health Canada, if you have traveled recently, that you do remain in self-isolation for 14 days and ensure that you do protect yourself as well as everyone else around you. So today we're going to be talking about educating and creating awareness around building good credit. I'm just going to pass it off to Jane just to do a quick introduction.
Thank you, Lea. Hello, everybody. My name is Jane Chen. I'm the Assistant Branch Manager like Lea, but at the RBC Newcomer meeting place that's located in the Markham location. I'm really happy to be here today, connecting with you through digital means. I hope you're all, like me and Lea, cozy at home and learning to adapt to the new norm. Hopefully things will get better very quickly. But during this time, I do want to say that a lot of things really do warm my heart. Even though we're in such a challenging time, people show so much kindness to one another by, providing those essential services to people, such as people at the hospital lines, be right in the front to support people who are in need of help, grocery workers, frontline, such as bankers, bus drivers, who leave their houses every morning so then other people can be taken care in the time of need. We're very fortunate that we're able to be at home in a safe space and connecting with each other and absorb the knowledge that we're about to present to you. We also see small acts of kindness, right? I've seen people dropping off food for the elderly families, delivering flowers to their parents, sending care packages, home-baked cookies to the elderly parents and siblings who work at hospitals like mine, by dropping it off at their doorstep. So then when they come home from a very long day, we can put a smile on their faces. It helps them feel like it's all worth it. In addition to small acts of kindness that we do as an individual, large corporations like RBC does share their part as well by donating millions of dollars to support those in need, to make sure that they have access to adequate food, water, and services. And people from other countries are supporting us through, donating resources that we once supported them with, and information and knowledge that they've gathered through their learning and experiences. With all being that said, before we begin the official credit deck, we wanted to, from our bottom of our hearts, RBC, Lea, and I just wanted to wish you all and your loved ones a safe and healthy time during this unprecedented time. And hopefully, and I know we will get through this together. So Lea, I'll pass it back to you to begin.
Thank you, Jane. And again, thank you everyone for joining the call. So I'll just flip to the next slide there, Sonia. Perfect, thank you. So what we're going to talk about today is really defining credit. Jane is then going to talk about what it is that we need to get credit, and then I'm going to touch base on building good credit habits right from the onset. We are going to spend a bit of time, of course, for questions. We find going through this type of conversation, there is a lot of questions that do come from it. So we want to ensure that we do designate some time, about 15 to 20 minutes for your questions that we can help answer. Just jump to the next one. Sorry, if we just jump to the next slide, Sonia. Oh, awesome. Okay, perfect. So credit, really. So what is credit?
It takes a second or two to
Okay. Okay, perfect. Thank you. So really, what is credit? So credit in the simplest form, the simplest way is the way that we borrow money. It's the ability to get something before paying for it, and the promise, of course, to pay it back in the future. So when it comes to credit, there's a few different players that we have in place, and we'll just flip to the next slide. And the players are the borrower, the lender, and I do just want to touch base on principal, because that's a really important term that we need to understand. So the borrower is simply the person that is receiving the money, the goods or the service, on the promise to pay it back, of course, in the future. On the other hand, we have the lender. So the lender is the person who is willing to lend the money, goods, or services to someone else to get paid back at a later date. The amount you borrow, the amount that we borrow, the amount that we lend is called the principal. So I'm sure everyone on this call today has maybe lent money to a friend before at some point, small or big, maybe family member, and that amount that we lent is considered our principal. So for example, let's say I asked Jane for $15, okay? What are some factors that maybe Jane may think about before lending me that type of money? Let me just jump to the next slide.
I don't know, Lea.
We'll see. What are these questions she's going to ask? So things that may be going through Jane's mind is, first off, does she have the $15 to lend? That's always important, of course. And she also may ask, am I a trustworthy friend? Am I going to keep my promise to ensure that I pay Jane back in the future? Do I have money coming in that I'm able to pay her back? So am I employed right now? Am I working? Do I have that steady income? And then will I pay Jane back? What is the time frame? Will I pay her back in a few days, in a few weeks, in a few months? What does that look like? And then what if I ask Jane, maybe not for $15, but what if I asked her for $500? It could feel a little bit different, right? So all of a sudden that amount of money, we may ask a few more questions because we want to ensure that Jane gets her money back. And that story changes as of course, the amounts go up. And there's also that risk factor. Some may say that $500 is a different story, and you may want to assess the risk factor with getting that money back. The risk factor is quite important. Now that you see how lending larger amounts of money can become more riskier, what are those questions that we may want to ask, and how do we really offset that risk? Let's just jump to the next slide. So it's that big interest. So interest is really that direct correlation that relate to risk. So the lender charges interest for the risk of lending their money. It's typically a percentage of the amount borrowed, but we call that amount borrowed, remember, the principal amount. To compensate the lender for the risk of lending it is always a risk that they are to see if they're willing to take. So let's say, for instance, going back to my example with Jane lending me that $15 or $500 or $5,000, really to offset some of that risk, it could determine whether it's a higher interest rate or lower interest rate that she could be charging me. And the important rule about borrowing on credit that everyone must know is, we'll just flip to the next slide. Principal plus the interest is the amount that you repay. So all forms of borrowing does come with a cost. It's never going to be free. So to keep your credit score in good standing, you must pay the lender, whether it's a bank, whether it's a credit card, whether it's a friend. Sometimes maybe friends charge you interest, I don't know, but they could, just to offset the risk. That's what that would look like. And we'll go into, I mentioned credit score. We're gonna go, actually Jane's gonna go into the credit score in just a little bit. So you must pay the principal or the amount you borrowed plus the interest, and that's really what the payment is. So this means that you will always have to pay back more than you borrowed. And that's really always an important rule with regards to credit. Oh, perfect, thank you. So the credit card statement is with interest. So there's a lot of really great information that is included on a statement, whether that is with RBC or somewhere else. And I'd always encourage you to look at what this is. So there's some key areas that I do want to go over. So the minimum payment, the new balance, and the payment due date. And they're just listed if you just click next, I think, Sonia, too. So it is important to know how to read your credit card statement so that you're not missing any important due dates. You're not paying more than you have in interest. And the ideal is to pay your full balance off by the payment due date. But if that is not possible, you need to ensure that you at least make a minimum payment so that you're at least paying off the principal plus some of the interest. Sorry, you're definitely paying off the interest plus some of the principal. And paying off the minimum amount does not impact really your balance. So that's very important that we ensure we always make that minimum payment, again, to remain in good standing. And like I said, Jane's going to go over that credit score in a little bit. Loans are a little bit different, student loans particularly. We're not going to go over too much detail with that, but we will stick towards the credit card because credit cards are really that first credit product that we usually get to help build credit for ourselves, and of course is the most common. So I'm just going to touch base on with the benefits of online banking here with understanding where these statements are. E-statements is something that I truly highly recommend for everyone to sign up for, and it's very easy to do that through the online banking. You just simply go under statements and just ensure that they're electronic. We keep these statements for 7 years. So there's not the list of papers that you have at home. You can pull them up if they're electronic through your online banking. There's also the ability through the online banking to set up auto payment on your credit card, which is great because again, when we do have any type of credit facility, it is very important to make sure that we make a payment on it, whether it's the full balance, whether it's the minimum payment. We'll go into more detail on that. You can also make the payment through your online banking. You can also check those benefits of points, cash back, all through the online banking. And one that I really do love is alerts for certain payment due dates. That is always important because I know life can get very busy. So always having that alert go right to your phone, just through text message or email, setting up that, hey, here's the payment due date, just remember to get that done, and ensuring that we always maintain good credit. We'll jump to the next slide there, Sonia. Before we go any further, let's just quickly discuss one area that I actually always get a lot of questions on. This could be pretty basic, but there is some differences here. So the difference really between the credit and the debit card. Credit is money that is borrowed, most commonly known as through a credit card, where debit is money that you actually have in your bank account. Most standard bank accounts, of course, have a debit card. Physically, why we get so many questions on this, I think, is because physically they both look the same. They both are a piece of plastic that, you know, could be shiny, but they definitely do different things. So again, credit is amount of money that you've actually borrowed, where debit is purchasing money that you actually have in your bank account. Now, for instance, if you don't have enough funds in the bank account that your debit card's connected with, it could then be a decline when you're making a purchase. So it would say maybe, you know, non-sufficient funds, or it would say something along those lines. If it's credit, there again, it's that amount that you borrowed. You could potentially go over the limit on that and still get a decline. So there's still a lot of those similarities, but I think it's just the basics for us to know today is just these two things. This is money that we borrowed, and this is money actually that we have in the bank account. I'll just flip to the next one. Thanks, Sonia. Okay, awesome. So there's many different types of credit to choose from. I'm going to go over just really briefly the most common ones, which are, yep, you're good, Sonia. It's credit cards, which we're going to talk a little bit more about. There's loans, there's credit lines, there's also mortgages as well. But just for the most common, today we're just going to focus on just the credit card, because as I mentioned before, it's the most common and then the most frequently used as well. So just going over details about, you know, credit cards. So generally the purpose, smaller purchases, online purchases. There's many times that online purchases, let's say for instance, we're trying to set up, you know, make a payment through Amazon, or maybe our Netflix account, we have to connect some type of form of payment through that. That's really where we would use that credit card. Or Apple subscriptions is another really good one. Now, is it secured? So no, it's not secured. So the borrower does not have to put up collateral to pay that, to prove that they have other means to pay the principal. This one sometimes there is cases where there would be secured and we do hold it as collateral. So it just kind of goes on an individual basis, but it could change depending on the situation. But generally, no, there wouldn't be a security. And what I mean by collateral is simply an asset. So it could be maybe a lump sum amount of funds. It could be maybe like a property, like a house. It could be a car that you maybe have outright owned. So that's really what collateral is. Interest. So this is really important to understand, is interest generally on a credit card is quite high. And it's high for a few different reasons. One is because the credit card loan is generally not secured, so there's that high interest. The second is to offset the risk that the borrower may not pay back the loan. So remember, we talked about that risk factor earlier. So that's really one of the biggest reasons for the high interest rate. The term, so less than a year. The term also refers to the annual fee on the credit card, which is due once a year. Some credit cards could have an annual fee, some do not. Payments on the credit card, though, are really important to understand because they're due on a monthly basis, or to be more specific, they're due every 21 days. So it's important that you keep track of your credit due dates by checking your statements through your online banking or setting up, like I said, those automatic payments or alerts. A smart way to avoid interest, and this is really important, a smart way to avoid interest altogether is by paying off your full balance or the amount that you have borrowed in full by the payment due date. This way you won't be charged any interest at all. You can only afford to pay back your minimum payment required by the due date. It will include principal plus interest charges on that payment. And if you miss a payment, again, altogether, many banks could potentially increase your interest rate, usually until you make your minimum payment again, and then the rates could go back down. But again, that kind of goes on an individual basis over if there's a few missed payments or not. So again, I would just recommend to touch base with an advisor on that as well, because it's different. Let's just jump to the next slide. There's a lot of really great benefits to different types of credit cards as well. So you may not know that all credit cards really aren't always the same. So credit cards often come with additional rewards that really can add up to really help you save money. So for example, let's say we have a cashback MasterCard, let's say, and you could earn 2% cashback on all grocery store purchases and then 1% on everything else. So again, every time that you use the credit card, because you had to make those purchases anyways, there's also some additional features that when you do use it, you actually start building up a little bit of a savings account for yourself with the cashback. Now there's also, instead of cashback, there's also RBC reward points that you can build up when you use it, and you can use those RBC reward points or points, not just RBC, but other points for gift cards, for merchandise. You can even, and Jane and I were talking about this earlier, use these reward points for even charity donations, financial rewards. There's so many different options that you can use those points for. And again, you just got them just for using the card. So a lot of really great features that I would highly recommend you look into to figure out what is all those benefits that I can get, because some of them are really great. And I know I absolutely love them. As I mentioned before, some credit cards do have an annual fee and some do not, okay? Interest rates sometimes can also vary from card to card as well. So again, just goes on an individual basis. And then I'm just going to pass it off to Jane to talk about getting credit.
Thank you, Lea. Get a sip of water. That was really, really good information. So in the next section, I'm going to walk you through about getting credit. So why would someone want to access credit? Well, there are many reasons. Maybe you really need to buy a car to get to work, or you really want to start your own business because you don't want to work for someone else, or you have some classes that you wanted to take to upgrade, to get you better educated, to get another job that you might want, because that's always a top of mind for newcomers, or you just need a place to stay and you need to rent somewhere. So it could be various reasons, and that's why credit is important, and understanding and getting credit is that much more important. Next slide, please. So anytime you want to borrow money, Lea kind of touched on this, but lender like RBC or any other lending companies will look at a number of factors. We call them the 5 C's of credit. So the first one is your character. That is how responsible you are when it comes to managing your finances and taking responsibility of your debt. The next one is your capital. The amount of money you have available to you from your savings, investments, assets, and so on. Number 3 is your capacity, or simply the ability to repay your debt. Are you working? Are you employed? What are the different ways you're going to source income to pay your debt? Number 4, your collateral, which Lea kind of talked about, which are assets that you can provide as a security for your loan. This includes real estate, so house for a mortgage loan, a car will be the collateral for a car loan, and etc. Number 5 is the final factor, which is your credit history, which essentially is a track record of your repayment of the loans and paying down your bills on time. Out of the 5 factors, this is probably the most important because it shows how reliable you are in keeping up with paying back your debt, which mitigates the risk of the lender. Next slide, please. So the moment you start using any type of credit, a credit report starts to get built in your name. And anytime you apply for credit, the lender can access this report to see your credit history, your history of being able to pay your bills on time. So your credit report is a summary of your credit history, and it includes the following information: your name, address, and social insurance number, the number of credit cards that you have or don't have, your loans, how much money you have borrowed, if you pay your bills on time or late. So why is credit report important? Well, businesses like RBC want to know about you before they lend you money. Think about it. Would you rather lend someone money who always pays their on time or is always late? I'll take the prior. Business look at your credit report to learn about you and then decide if they want to lend you money or give you a credit card. Another thing to note is that sometimes employers actually look at your credit report when you apply for a job. Cell phone companies and insurance companies also might be interested in your credit report. So employers, when they look at your credit history, they don't do a deep dive. They just want to make sure that you've not conducted any fraudulent activities. Next, please. So your credit history is your financial reputation. It's a picture of how well you manage your money, whether you've paid your bills on time, what your outstanding debt is, and whether you've missed any payments. Over time, this data forms a pattern of how well you pay or don't pay your debt. Anytime you apply for a loan or a credit card, lender will look at your history to help them decide whether or not they should accept your application. Landlords may look at it to see if you're the kind of person who always will pay their rent on time. So your credit score is a number, typically in Canada. In simple words, your credit score is a number assigned to you that shows your ability to borrow money and repay it. The higher the score, the better. In Canada, the credit score range from 300, which either means you're just getting started or you haven't been responsible, up to 900. According to TransUnion, a credit company that provides credit reporting, a reputable credit agency, which is a reputable credit agency, 650 is an average score for most Canadians. I think a credit score is your financial report card, how I look at it. A being the best and F not so good. So we all try to aim for A, I hope, in school. To calculate an individual score, a specific set of risk rules are applied to an algorithm, which draws some assumptions about the individual's spending habits and then assigns a number, which is the score. Lender may also use the score to set your interest rate and credit limit. If you have a high credit score, you may be able to get lower interest rate on loans, which can save you a lot of money over time. A good credit score can also help you qualify more easily for loans. That could mean big savings for you because you could be paying lower interest and have greater repayment flexibility than someone with a low credit score and poor credit history. So some of you may be thinking right now, well, I'm new to Canada. I don't have any Canadian credit history. Well, good news is RBC has you covered. We understand your situation and we have a special program in place to provide you with your first credit card in Canada without any credit history to help you start building your credit journey here. In addition to many product offerings that we also have specifically tailored to newcomers to Canada. For more details, just contact one of us. Next slide, please. So a credit score and a strong credit score are important. And if when the time comes for you to make big purchases in your life, whether it's for travel or a place to live, you don't have that cash, you will need credit. A good credit score helps you qualify for loans and secure lower interest rate, like I've said before. So I'm going to share a personal story of mine. I never thought I needed credit because I didn't understand credit. So I'll start a little bit from when I was a student, obtaining my first credit card from RBC. I had no previous credit score. They just gave it to me because they understand that students, like newcomers, need to build their first credit. And my needs were simple. I just wanted to buy a couple books and have lunch and hang out with my friends. As I graduated from university though, I was very fortunate. I got my first real job, full-time job with RBC as well. And I needed a means of transportation. How am I going to get to work? I can't walk there. I don't really want to take the bus. So I said I wanted to get a car. So I leveraged the loan from RBC and got my first pre-owned vehicle from my sister, which is a Yaris that I still drive until today. That's one thing that remained constant over the last 8 years. That was my orange Yaris. It really brought me through thick and thin. I love this car. And then a couple years into my career with RBC, believe it or not, I met my husband through RBC, and together we wanted to buy our first home. So obviously, I'm gonna go to the bank of my choice, which is Royal Bank, and ask the mortgage specialist to help me out to obtain my first mortgage loan. I was hoping I could qualify. So as we mentioned how important good credit is, the 5 C's of credit were asked by the mortgage advisor. And thankfully, me and my husband are both very financially responsible and managed our credit very good. And we were able to qualify for our first mortgage and purchased our first home and used our first home in Stouffville, Ontario as a collateral to the loan. And we still live here today, and I'm doing the webinar from my house today. The need of credit never ends. I thought it would. Couple years after we settled down into our home, we decided to get married. And weddings are expensive, as most of you or some of you who've been through know it. And we basically used the mortgage that we've been kind of paying back in the last 2 years and drew some equity from that and used that equity to finance our wedding. So couldn't have gotten married without more credit. Oh my goodness. But having the ability and a job to pay it back and do it right can really bring the best life and help you and your family live the best life. As I go and settled into my new home, I thought, my credit needs must end now. Maybe not, because, very happy to say that we're expecting our first child. And I'm thinking in my head before I go to sleep now, it's not about me anymore. It's not about him. It's about what if he or she needs money for education? What if they want to be a doctor? Even though I can save in RESP, they might need much more. So I think about student loans. Think about their first house. Think about too much thinking, right? For those who are parents, you know what I'm talking about. So all this is to say is I never thought credit was going to play such a key role in my life, and yet it has. So every step of the way, as you progress through your life, you may need to find the need for credit and make sure that you manage it well, like we have taught you today. So I'll go to the next slide. So you pretty much know my whole life in a nutshell. So there are 2 national credit bureaus in Canada that collects your information and generates your credit report and your credit score: Equifax and TransUnion. A big note of caution: don't trust other sites that claim to provide you this information, as they might not be trustworthy. Credit reports are usually free every 12 months, and you should request a free credit report once a year to make sure information is true and accurate. Why do you think that's important? Well, because creditors and sometimes even employers can request this report, right? And you want to make sure it represents you the way you truly are. You can also request your credit score from Equifax and TransUnion, but they might be a charge. That's why I am very happy to tell you that you can check your credit score through RBC Online Banking free of charge. So let's take a look. Next slide, please. So all you have to do if you are an RBC client or going to consider to become an RBC client, you just log into your online banking account. Under My Services, you'll find a link to view your credit score. It'll show you your TransUnion credit score so that you can see where you stand. And you can click on the credit report to see a summary of all of your accounts, all complimentary. When you scroll down, you'll see a score stimulator, pretty cool stuff, that lets you play around with adding a credit card or a loan and increasing credit limits so that you can take a sneak peek at how it could affect your score. Do I really need more credit? Can I really afford more credit? That credit score stimulator will be able to give you an insight. As you can see, there's a lot that goes into creating your credit score, and there's a lot you have to do to keep it in good standing. So let's do a deep dive into the impacts of your credit score. Next slide, please. So this is a little bit of a bigger slide, but it is a very important slide. There are two most important factors in play here. These are the different factors that will influence your credit score. So the top two would be your payment history. We've said this, I think, on a repeat tape now, but because it is important. Pay all of your bill on time and if possible in full, so we don't charge you any interest. Paying late or having your account sent to a collections agency has a negative impact on your credit score. Second is your credit utilization, sometimes called balance to limit ratio. In other words, don't max out your credit card and try to keep a month-to-month balance of less than 50% of your credit limit, so it won't affect your credit negatively. For example, if your credit card limit is 1,000, try to keep a month-to-month balance of less than 500. The other factors include new credit application. How frequently you apply for a new credit affects your credit score. Only apply for credit you really need. Too many inquiries in a short period of time can sometimes be flagged as a sign of financial difficulties. It can be seen as overextending yourself by taking on more debt than you can actually repay. You have to remember, we are a credit lender, but we want to help you live your best life and not make you poor and in debt. When we lend you money, we really do care and look at if you're able to take on more debt. We'll give you advice based on your situation and in your best interest. 5, I think I was at 4. So 4, credit variety. How balanced is your mix of credit? A healthy credit profile has a balanced mix of accounts and loans. So a credit card, maybe a loan. We're going to talk about good debt and bad debt later, which Lea will cover. So a variety of different kinds of good debt would be good. Account history, having a longer account history on your credit card earns you more points. So avoid closing your accounts if you may need them in the future. A good credit history is built over time. So yes, for those are brand new to credit, it's okay, we understand. And that's why your first credit card is without credit history check, but it does allow you to build up that credit for other needs in the future, more complex credit needs, as I was mentioning earlier. Number 6 and last is having too many accounts. Having access to too much credit is like having multiple credit cards, loans, can be a warning sign of financial distress. It can also make it difficult for you to borrow money in the future. Even if you aren't using the credit card, a blank will look at the credit you have access and evaluate your financial health that way. So basically, if you're not going to use it, don't get it. You should have a plan in place, a credit card for a reason or a loan for a reason. Now that you know what credit is and how it impacts your ability to get it, so let's review some best practices around credit, which Lea will take you through.
Thank you, Jane. That's such good information to have, and I saw a few questions coming up, so looking forward to seeing those at the end here. So part 3, so we're going to just quickly talk about building good credit and good credit habits. So we'll just flip to the next slide. Because not all debt is created equal. There is such a thing as good debt and something that's viewed as bad debt, okay? So building good credit and practicing good credit habits today really is important for accessing credit in the future, just going back to Jane's great story. So good good debt is an investment that will grow in value over time and generate a long-term income. So for instance, good debt generally has a lower interest rate as well. So just, going back to a student loan. So student loan would be considered a good debt because it's for education. That education will help allow you to, get a good job in the future. Another example is business ownership. So really a loan with business ownership, that will really help start your own business so that you have control over your career. And of course, a mortgage. So paying a mortgage would be as well good debt because it's a property, and generally properties do appreciate in value. Where we go to bad debt, so incurring purchases that things that really lose their value and don't generate a long-term income. And so bad debt is also debt that carries high interest rates as well. So again, they're not very attractive to hold balances on, like the credit card, because bad debt is more expensive to borrow and especially important to pay on time. So that is our, carrying a balance on the credit card, cash advance, payday loans, those types of things, higher interest rates, want to pay those back right away, and generally losing value quite quickly. We'll jump to the next slide. And I'll go quite quick. So again, building good credit with good credit habits. So paying your bills all on time, as Jane mentioned, is very important. And ensuring that, they're not going to collection agencies, because those types of things, if they do go to collection agencies, they do have a negative effect on your history and credit score. Reducing your debt. So paying more than the monthly minimum payment and prioritizing paying off the higher interest debt first, such as credit cards. And really that's because debt is costing you more in interest than others. And this will help you reduce your overall cost of borrowing and help keep that debt at a really manageable level. As Jane talked about, correcting any errors on your report, this is really important. And that's why, being able to pull your report through the RBC Online is a really great habit and great routine to get into. I actually had a time where I actually had a full credit report, and there was a few things on there that the client and I weren't familiar with. And we realized because him and his son had the exact same name, the exact same address, there was actually a bit of an overlap with the report. So this can absolutely be fixed by contacting TransUnion or Equifax. And again, through the online site, we do have many different resources that you can go to get that resolved. However, let's make sure we do get it resolved because it is important. And again, it's your financial reputation, right? So we want to make sure that's accurate. Use credit cards responsibly. Only use credit cards for things that you know that you can pay back right away, or not right away, I should say, but pay back in that time period. And we're just, we're spending within our means, right? We're not overspending, and we know that we are able to, really wipe that balance off at a good time. And lastly, again, starting early, be patient. Good credit behavior can take months and sometimes even years to build up and build up that credit score. So it's important that we do start early. We do create these good credit habits right from the onset that will really help develop a good credit score. So with that being said, Sonia, I think we're going to just also due to time, actually that's perfect, open it up to some questions, and then we'll do a bit of a close off.
Perfect. Thank you, ladies. That was a great lesson on credit. We do have some questions already waiting in the questions tab. So everyone, you can start typing your questions into the questions tab, not the chat, and we'll start taking them up. Please keep your questions short so we can get through everyone's questions. All right, so question here is, what are the different options for a newcomer to build good credit score in Canada? What if the newcomer is still unemployed and looking for a job?
Do you want me to take this one, Lea?
Sure, take that, because you kind of went over this in your part, so yeah.
Yeah, so as mentioned, first of all, your first credit card, depending on your landing status, we have different programs to suit for it. If you're a permanent resident, I don't want to say 100%, but very likely you will qualify for a first credit card, even without employment, even without a credit history, because we understand you need that time to settle in, to look for your first employment, and also to have the opportunity to build up the credit. How are you going to build up credit if we don't give you the first credit? And there's other statuses such as refugee. We also does just a little bit of a smaller limit. The limits might vary depending on your landing status, but again, you might be able to be qualified. Most likely you will. I don't want to say everything 100% because just to leave a little bit of room for any special cases, but we definitely have various different programs tailored to any sort of newcomers, whether it's international visa students, permanent workers, permanent residents, refugees, and etc. So don't worry if you don't have employment, and don't worry if you don't have credit history. We should have you covered.
Awesome. Next question here is, does accumulating interest on a credit card accelerate the growth of your credit score?
I'll help. Yeah, accumulating interest, sorry, just a bit of clarity on that one. So interest is charged on your balance that you have. Do you mean like, are you using your credit card? Will that help build your score? Or Jane,
yeah, maybe you can just go over the facts. What happens if you do owe, like if you are, I guess there's a lot of interest being charged on your credit card. What are the consequences of that? Maybe if you can explain that.
So yeah,
you go ahead.
Oh, sorry. No, yeah, so if there's a lot of interest being charged on your credit card, first off, I would say, you know, we're going to go back to those you know, trying to pay off the full balance and don't get charged interest. However, if that can't be at this moment in time, just ensuring that we make that minimum payment is really important. That minimum payment really just allows us to remain in good standing with the credit reporting agency. So just on our credit report, it shows us perfect, that payment was made. You know, again, just going back to that, you know, showing responsibility, kind of showing those 5 C's of credit allows us with that minimum payment. I then would absolutely recommend for you to contact maybe your local branch and a local advisor. Right now, it'd probably be a telephone appointment, but again, creating a bit of a financial plan, maybe a bit of a budget to figure out what is the best way that we can pay down this credit card as fast as we can. And I think talking with an advisor would be the best case for this because everyone's situation is a little bit different. Jane, is there anything that you would add with that one?
Yeah, so my understanding of the question is, if you were to if you were to leave a balance and pay interest, would that increase your credit score? The answer is no. Our recommendation and our advice to you is, if you can, pay in full and pay on time. There's 2 components within credit. Pay in full means that you don't pay any interest to RBC Royal Bank, for example. Pay on time gives you the credit score. So if you can't pay in full, but you paid on time with the minimum balance, that will keep your credit in good credit standing. So if you paid in full and pay in time, obviously that's the best choice. You don't pay any interest and you've paid on time, which is great for your credit score in general. Hope that answers your question.
Thank you. Next question is regarding promotions for newcomers. So how can newcomers find out what RBC is offering exclusively to newcomers and some promotions? Would this be on your website, or what's the best way to find out?
I'll take this one because I work at the Newcomer meeting place in Markham. Number one, you can definitely come see me and my team, both in Markham location as well as a Brampton location. Right now, we're taking telephone calls as the current situation. Option number 2, we have our online website. There's a special page for newcomers to Canada, telling you everything that we have to offer. But just briefly, as mentioned, you will get your first credit card from RBC without a credit history. Second, you can have a bank account with unlimited transactions for the first year, free of charge, as well to you. So those are, and there's so many other beyond banking partnerships that we have to support our newcomers as well. Just dig a little deeper, contact me, and use our online resources.
Thank you. And how long do you have to build a credit history to be for it to be good enough for car loans or mortgages? As a newcomer.
Yeah, Jane, maybe I think you would know probably best. Yeah, okay.
Sure. So as a newcomer, that's a great question. It is a case by case. It really depends on your situation. So we look at, if you don't have credit, we look at other 4 C's of credit. If you don't have one of the C's, we can maybe complement the other, the stronger C's. But with newcomers, we also have a newcomer mortgage what do you call, sorry, just out of words right now. So basically there's another program for newcomer mortgages. So we have certain exceptions because you're a newcomer to qualify for a particular loan, as well as for car loans as well. Again, no credit history, they're required. So pretty much any type of goals that you have as a newcomer, we have designed a folio in place to make sure that we understand and address your situation differently from, say, a traditional borrower. So just talk to one of us.
Thank you. And can you just go over how the cycle works? So if someone has made a purchase on the following date of the statement date, how much time or how many days do they have to avoid paying interest?
21 days. So you can pay any time prior to the 21 day, as long as it's before the due date. And the due date is always mentioned on your statement from any financial institution. As long as you pay before that due date, you will not be charged interest if you paid in full.
And how can someone check their credit score without it impacting their credit score?
Through RBC Online. Lea, jump in anytime you want. But basically through our online banking, it is free of charge and you can check it as many times as you want without getting a hit on your credit inquiries. Only when you pull from when you're basically the only time that will hurt a lot when you take it too many times. So if you're looking for a mortgage loan, for example, and you went to bank A, B, C, D, and each bank pulled your credit report for the one type of loan you're looking for, that will put a little bit of a dent on your credit scoring.
And now if you're not with RBC, there is other ways and other apps I think that you can also use to check your score. Through, again, TransUnion and Equifax as well, you are able to see your report definitely at least once a year without that being, of course, like Jane said, without that being pulled and actually affecting your credit score. There's other ways as well. So don't know specifically, but I do, of course, know the RBC side, which is completely free.
Thank you. And so what is there, oh, hold on, let me just rephrase this question a little bit. Should you only be using 50% of your credit limit to keep an excellent credit score, or like should you maintain it at 50%? Is it okay to go over?
I mean, it's a recommendation, right? If you're able to, I think it goes back into your financial picture. If you know you have $1,000 in your debit account, I wouldn't use more than $500 to cover my credit card, because you have other things that you need to buy groceries, transportation, all kinds of different expenses you have. It really depends on your overall financial picture, but we recommend that you keep it at 50 because it'll be under 50 because it'll be easier for you to handle. But if you're able to pay on time and pay in full, your credit score will generate beautifully.
And if someone has, sorry, go ahead, Leah.
Oh, sorry. And I was just going to go back to the example that I used on Jane. So if for instance, I asked Jane for $500 and I said, okay, here's the $500, but yet I only used $250 of it, right? For Jane's, point of view, that would say, okay, perfect. Like, she's not spend, even though she can spend the full $500, she chooses to only spend about half of it, right? So again, it goes back to, the responsibility, the budgeting, the whole financial picture that really does show that, from the lender's perspective, that's, you're managing those funds quite correctly. So.
Thank you. And if someone has a really good US credit history, would that help them in any way to get, I guess, a good credit in Canada right away?
There are certain, that's a really great question. There are certain products, such as mortgages, where we are lending larger amount of money that we do take US credit into consideration.
Okay, good. I'm glad that question was asked. Okay, so.
But our bureaus are separate, though. That's just one thing.
Right.
So if it is to get if you got a great credit history in the U.S. and again you're trying to get a credit card here in Canada, I can't see those two credit bureaus. Different countries have kind of the different credit bureaus. Ours is TransUnion, Equifax. U.S. is something different. So there is a little bit of differences there, but in terms of the mortgage piece, there is that option.
Perfect, thank you. And things like paying your rent on time, does that reflect on your credit score?
Everything does. So when you're borrowing money, if you go to the gym and you have a reoccurring payment, you have a cell phone plan, you have anything that reoccurs through your account that shows up on your credit report, it affects your credit positively or negatively depending on how you use it.
That's a great question too, because and this kind of goes back to, it's not necessarily you would always pay your credit card through through a Visa. I know that there's digs in certain tools that you can, but if your landlord could potentially, put something through collections that would go on your credit report, that would affect that. Okay. So, but if you pull your report, you won't actually see, the rent on there as you would normal for other types of like subscriptions. It could go to collections. So anytime you hear that collections, make sure that you just, get that figured out. Okay. As soon as possible.
Don't get there. Don't get there.
Don't go to collections.
And, so hold on. How does this impact your credit score? So if you're paying just minimum payments, or you're paying out your entire credit card off every month, does it impact your credit score? Is it the same?
With credit, basically, as long as you're able to pay on time and pay regularly as per your agreement with the lender, your credit score will build strong. I hope that answers the question.
Yeah.
And let's say that you have credit cards with different banks.
Yeah.
How would you check your overall credit score? Like if you're checking, let's say I have a bank credit card with RBC and another bank. When I check my RBC bank, am I only checking my RBC score, or is it overall?
That's a great question. So the report that's provided, the partnership that we have with TransUnion, so TransUnion it collects data from all of the different credit lender companies. So if me, for example, I have a car loan, have a TD loan, have a Scotiabank, it could be from any variety of sources, Rogers, it goes into that credit report. So when we, through our online banking, provide that credit score to you, it's actually been provided through TransUnion to you. Just that we have a partnership with TransUnion to give you that service included. Yeah. So I hope that answers your question. It's not just RBC products, it's all of the services and loans that you have acquired through any financial institutions or credit companies.
I think that helps a lot of people asking that question.
Yeah,
thank you
perfect.
for clarifying that. And when employers do a credit report check or a credit check, does that impact your credit history at all?
No, because they're not going in 4 or 5 times. They're only going in to check something very simple. I mentioned this. They don't do a deep dive. They just want to make sure, especially when you apply for, people want people with integrity. So they just want to make sure that you don't have any fraud. You've never done any fraudulent activities in the past. They're not actually looking to see how much balance do you have on your credit card. More interested in your code of conduct and your integrity.
And
Sonia, sorry, can I just jump in really quickly here?
Sure.
Just due to time, because I know some people will be signing off. Just kind of on a side note, if everyone could please share who is on this call, just share with us maybe some things that are on your mind during this time, and even just give us some ideas for other future events or future topics that we could host. I just wanted to kind of put a plug in there in case anybody does need to sign off right at that 12 o'clock. So again, if we could just get your feedback on that, again, share with us just what's on your mind right now, so that way we can continue improving and continue developing these great webinars that really help everyone. So I just want to quickly put that out there, and then we can go to the next question.
Thank you. Is it okay to have credit cards from different banks, or does that affect your credit score in any way?
All debt is pretty, like all the credit card is pretty equal, whether you get it from RBC or another financial institution. It's how you use that credit is more important.
All right. And so I don't know if you've gone into detail about like a dependent credit card user, and how does that impact, I guess, their credit history if they're using the main cardholders, I guess, credit?
Yeah, so there's two types. One is called a co-applicant, which means that they're in and on this credit with you together. So me and my husband has a joint credit card. So if my responsibility becomes his. So if I have bad credit, he will most likely have bad credit because we have shared that one credit card that went delinquent. But so that's co-applicant. So there's another one called authorized user. So that's usually for kids or someone who is dependent on you. That you will authorize the X amount. So if your credit card is at $1,000, you can say that I let my kid use $200, that limit, to buy books and whatever else they need. You are responsible for that credit. So if your kid doesn't pay on time, it's on you. So your credit report will be affected. So co-applicant, both of the people on the card will be affected. A authorized user, only the applicant themselves will be affected by the credit score if used negatively or positively. Yeah.
Perfect. Thank you. I know we are over time. I'll take one last question just very quickly.
I know this topic always has a lot of questions.
Oh, there's so many questions.
Yeah. Yeah, I mean, if it's worth it for us to do it again, always here.
Yeah. Okay. So how does somebody correct an error on their credit report? So let's say, there's something on there that shouldn't have been on there. How can they, what's the process?
Yeah, that's a great question. So I'm sorry, we always keep jumping back to the RBC check your credit score. So there's actually a detailed outline on what you can do. But for those of you who maybe aren't RBC clients, you can contact TransUnion or Equifax, and they will give you instructions on what to do to get that corrected. There is some, and I don't know if anyone's local here in Ontario, local around even Toronto, but there is actually some even physical sites that you can go to also go in and actually get that corrected. So again, just contacting TransUnion or Equifax to get that, organized and taken off, and they'll ask you to provide them, of course, identification, proof, all those types of things. But just again, I just recommend just get on that as soon as possible, so that way it can be corrected, and moving forward isn't an issue.
Thank you so much, ladies. Even though I have tons of questions on hold, I hope we can get you ladies to come back and answer these questions. And if you like, you can always email them or email us. I'm going to just go over to the next slide so you can see our email as well. So we are at onlineservices@accessemployment.ca. Email all your questions so we can save them for the next session. And ladies, do you want to say anything before I move forward?
Yeah, I'll just kind of just quickly jump in here. First off, again, just thank you everyone for jumping on and investing in yourself to get these questions answered. This topic is so very important. Impacts you right from the onset when we first get our first credit score, even throughout life. So some really great information here. So I hope that everyone was able to take some notes. Again, for those of you, Jane and I's information was on the screen there. So we do ask, if you're not RBC client, feel free to contact us. We will do our best to get back with maybe those questions that you have or booking those appointments. We do ask that for RBC clients to do go online and go through the online booking tool. As of right now, pretty much everything is going to be a telephone appointment. That's really due to the safety for yourself, also the safety of our staff and our communities as well. So again, there was also the public website that was posted on that last slide. Again, just important updates, the relief program, branches, frequently asked questions. So please, I know that this is a topic that is top of mind, so please feel free to go in on there and find out that information. Again, reminder from public health, if travel, please stay self-isolated for 14 days. It is so important that we all do our part in this. And because we really, as Jane mentioned, we hope that this is over soon, but we have to all take responsibility for doing what's right. And again, please share your thoughts, and again, what is on your mind, so that we can continue to help everybody and continue to come up with new material and new information that we can share with all of you. So I know that was a lot. So Jane, I don't know if there's anything else.
I mean, you pretty much covered it all. I just wanted to thank you all again for being here today and giving us the opportunity to share some of our knowledge with you. And in conclusion, and I was mentioned in the beginning, we really just wish everybody a safe and healthy time during this unprecedented time. But remember, we're all here to help, and we're really just a phone call away. Thank you for investing time in yourself to learn about credit today. Hope to see and talk to some of you soon. And take care and stay digitally connected with your loved one. I think that's very important, especially when we're all cooped up at home. It can feel kind of alone sometimes. So just reach out to your loved ones and friends just to say hello and keep each other warm at heart. So take care, and thank you so much for your time today.
Thank you so much, ladies, for all those good tips, and especially the last few ones you just mentioned. For everyone that is looking for job search support and you're not able to get a hold of someone, you can always go on our website and click on our ACCES tab, and you can see all of the past RBC webinars that are posted on there. We've got other job search resources for resumes, interviews, networking, and more. And our next webinar coming up is actually tomorrow. It's catered towards the pharmaceutical industry, and it's a great webinar, and I'm really happy that Sanover will be delivering. And this morning, I just found out that RBC will be doing another webinar on April 9th. So stay tuned for that. We will post it Inspire Arrive, and they'll be talking about building your network in Canada. So I'm really excited about that one as well. I didn't have time to post it because I literally just found out right before. So we're very happy that even in this time, RBC is super cooperative and bringing these webinars to you, so you have something to look forward to in terms of your job search. And if you have your PRs and you're ready to come to Canada within the next few months, we don't know when that's happening, but whenever you are and you feel like you want to start your job search, this is actually the best time, because I know that people are waiting to come to Canada. So you can email cec@accessemployment.ca, and they can help you get started with your job search before you even arrive in Canada. And again, thank you everyone. Follow us on our social media to find out what's happening at ACCES. We're on Instagram, Twitter, LinkedIn, and Facebook. And thank you very much, Jane and Lea. We hope to get you guys come back to answer all the remaining questions, because we've got so many.
For sure.
Perfect. Have a great day ahead, everyone. Bye now.
Bye, everybody.
Stay safe.